So we're going to go ahead and take a look here at module 2.04, the what is stock anyways assignment. There's going to be two things you need to do for this one. You're going to fill out a chart and you're going to answer some questions. So you want to go ahead and do a quick screenshot here. So if you can, do a quick screenshot on this page real quick. What you'll do is off to the left-hand side, you'll see that there are investment types. You have your certificates of deposits, your money market accounts, your stocks. An IRA is actually an individual retirement account. It's technically not an investment. It's where you would place your investment, and it's something that helps protect you from long-term capital gains taxes. But what you'll do for this assignment is fill out this chart for those investments, and then you'll scroll down. These are the remaining investments here. So you have stocks on the last ones, but bonds, mutual funds, futures, and traditional bank accounts. So go ahead and do a screen capture of this as well, and that'll be the end of this chart. So for each one of those, you'll go ahead and give a brief description, just a couple sentences. I understand that everybody's probably going to be typing this into Google and pulling up the same websites to make sure that you do not have a high score on the turnitin.com, so you're not flagged for plagiarism, so you don't get a 0 on it. To make sure that doesn't occur, please go ahead and just read through the description and put it into your own words. You want to make sure, again, that you're putting this in your own words. Do not copy and paste. Put the information in your own words so that you do not get flagged for plagiarism and you do not get a 0. In regards to risk and potential return, please note that the lower the rate of return you get from an investment, the typical lower the amount of risk. Low risk, low return. Certificates of deposits are relatively low rates of return, low risk. Money market accounts, lower risk. Your bonds are going to be lower risk. Your traditional bank accounts, like your checking and savings accounts, low risk, low rates of return. The riskier investments, like your stocks here and your mutual funds, which are a collection of stocks, typically have higher rates of return and are going to have higher levels of risk. So after you've gone ahead and filled out that chart, you can give some real life examples here of what some stocks are, such as McDonald's, Coca-Cola, Walmart. For your minimum amount of investment, it would be the price that you'd pay for the actual stock, or how much you would need to open up your own checking account. Oftentimes, they're very, very low amounts. Lastly, the last thing you're going to do here, you can take a screenshot of this quickly. It's just answering these questions. When they say explain how you obtained your money for your investment, you can make that up. You can pretend like you had a job and after you pay all of your bills, you have some money left over. That's fine. Choose 3 different options there. Maybe you say I put some money in my own savings account. I use some to buy a bond and a little bit of some stocks. That's fine. You're just trying to reflect your risk tolerance. If you have a relatively low risk, you don't like a lot of risk, then you're going to go ahead and invest in things that are having low rates of return. But that's all you're going to have to do for the assignment there. Just answer the rest of those questions and you'll be good. All right, have a great one, guys.